Hello and welcome and a very warm afternoon. You're watching Closing Trades on ET Now, and of course you're catching us live from the Suzlon studio. I am Snehi Shah and taking you through the last lap of the market day. Just quickly taking a look at what the markets are up now. With an hour and a half to go, we're absolutely flat on the indexes. You've seen a little bit of a drop coming in from the day's highest point, and we're struggling to even hold on to that 24,000 mark right now as we speak. And it's barely an 18-point uptick coming in on the Nifty 50. Remember, we were as high as about 0.6%. In fact, the day's highest point was 24,217. So we've seen a very sharp fall coming in from there. It's close to a 200-point fall that we've seen so far on the intraday basis for the Nifty. Sensex 2 has fizzled out all of its gains from the day's highest point, just 0.1% higher for that index. 77,184 is where we're at. Nifty Bank, however, continues to see some resilience, 0.4% higher on that index, and the broader end continues to do pretty okay for itself. Even though we've seen moderation from the day's highest point, the Nifty mid-cap index is higher by about 0.4. The small-cap index is higher by 0.6%. And about 30 or 40 minutes ago, you can see the common thread that we've seen a little bit of a cut coming in on across the board rather, and that's the kind of weakness where we've seen the tilt turn in the favor of the declines. Speaking of which, just pulling up what the broader end of the market is up to, the Nifty 500 still has about 320 stocks in the green, with the remaining in the red. But yes, there is some pressure from names like Patanjali Foods, the biggest casualty of the day, 15% lower on that one. The management told us that there are no regulatory hurdles that they are looking at right now. There is nothing to flag off on the regulatory front, no issues, business as normal, and more importantly, they are on track to achieve their FY27 guidance after the first quarter that they have seen. So that's the conversation we had with them. Nonetheless, the stock is lower by about 15%. Slight recovery from the day's low, but still that casualty continues. Tata Elxsi on weaker than expected numbers, a 5% cut coming in over there. You've got Zensar Tech, some Adani Group stocks, Adani Power, Adani Green. They are also seeing some cuts, followed by Physicswala, Delivery, Go Digit, and JSW Infra. On the flip side, however, what's doing well for a second straight day, in fact, is Novoco Vistas. You're seeing a 13.25% uptick coming in on that stock on the back of bullish brokerage notes coming in. Remember, the numbers yesterday were very strong. Gabriel Industries, Aegis Logistics, Aether on the back of that Hero Investment, LTTS, HFCL, ABB, Grow has some solid numbers, 4.7% higher over there. We've seen numbers on ICICI Prudential too looking like a good set, and that stock was also doing well. But while that's everything that you need to know from the broader end of the market, let's get you a little bit more in terms of the specifics when it comes to some of the biggest buzzers in trade today on the back of some news action. And we've got Avi who's joined us on the show with a list of just that. Avi.
So some of the stocks buzzing in trade, I would like to start from Belrise, which have announced their QIP of 1,900 crore rupees at a floor price of rupees 230, which is almost flattish to yesterday's closing, and that is the reason we can see some buying inflows in the stock of Belrise. And ET Now research tells us that all the stocks that have come out with the QIP, majority of them have rallied very strongly after the QIP. Up next is Dalmia Bharat Sugar, that the board of which has announced a 132 million project in Tanzania for setting up 3,500 TCD sugar manufacturing plant along with a 20 megawatt co-generation facility through a subsidiary. So this is seen as a big positive for the company, and we can see some good action there. Up next is Jain Resource Recycling. A sad news there, as one of the furnaces blasted in the Tamil Nadu manufacturing facility, and as a result of which one worker died in the plant, and that is the reason we can see some selling pressure on the stock as well. Up next is Anand Rathi Stock Brokers, who came out with the Q1 FY27 numbers, and we can see that on a sequential basis the numbers are not that good, and that is the reason there is a selling pressure on the stock as well. The revenue is down by around 3.7% and the EBITDA is down by around 11.5%, and the EBITDA margins have also contracted by around 350 bips. On the profitability front, the profit on a sequential basis is down by around 44%. Our last pick would be KEC International, that has won an order worth 1180 crore rupees for T&D business, and this is they have secured the first transmission line to power an Indian data center. So these are the stocks buzzing in news like Belrise, Jain Resource, KEC, and Anand Rathi.
Thanks so much for taking us through that. While those are some of the top buzzers, one stock from the sector that Avi tracks very closely, the auto space, is also a buzz, and that's Aether Energy. You've got news coming in over there that Hero MotoCorp is back in focus after its board approved an additional investment of up to 1,000 crore rupees in Aether Energy. That stock is seeing gains of about 7.5%. The investment will be made through a preferential allotment of equity shares or convertible securities. Avi, while you're with us, give us some details on this as well.
Ether has been firing up, and as you can see, the stock has moved phenomenally since its listing in May 2025. The stock has been a 4x bagger since it was listed last year. Talking about the deal that has taken place, so Hero's board, which is committee of directors, has approved 1,000 crore rupees additional investment in Ether Energy, and this investment will be done by the preferential allotment route, which means either equity shares or convertible securities will be issued. The deal terms are that 100% cash consideration will be given for this 1,000 crore rupees further investment, and the deal will have to close within 15 days of the final approval. Ather is already an associate company of Hero MotoCorp, as Hero MotoCorp owns around 30% of Ather Energy, and this will further increase their stake in Ather Energy. So Ather Energy has been one of the most successful strategic bets for Hero MotoCorp, as it invested in Ather Energy long before its listing in the early days and has seen a big multi-bagger return on this strategic investment. Some of the key points for this deal are that Hero is doubling down on their EV bet and are increasing their investment, which is a green signal to the growing EV adoption in the two-wheeler segment. And this fresh growth capital for Ather Energy can be used for capacity expansion, R&D, and new product launches. Also, this is a great boost to investor confidence before the Q1 FY27 results come in for Ather Energy. Talking about the price movement for Ather Energy, it has rallied by it has been a multi-bagger stock, as it is 4x since its listing in May 2025, and in the last 6 months alone, the stock has doubled. Talking about this month, as in the past 1 month, the stock has given a return of around 18% to the investors. So Hero MotoCorp investing around 1,000 crore rupees additionally in Ather is a very big positive for the company of Ather Energy.
Thanks so much for taking us through that. Yes, of course, both of those stocks are in focus, but the company that's receiving the investment, that's Ather Energy, is up 7.5%. Good move on that one. Shifting focus then, time to get into a very important fundamental conversation in terms of what to make of the updates and earnings we've seen so far. Where is the action in the market, and where should you be betting right now? We've got Mr. Dikshit Mittal, the Senior Fund Manager of Equity at LIC Mutual Fund, joining us on the show. Dikshit, hi, good afternoon. Good to be speaking with you. Let's start by getting your sense on how you're seeing the markets. We've seen a resurgence of all the geopolitical tensions once again, but so far the markets have been largely resilient. We've been in a band of about 200 points here and there, but nothing major like we had seen in the first leg of the war. How are you reading the way the market has this time reacted to this escalation, and do you believe that the concerns are largely priced in now?
Yeah, good afternoon. Thank you for having me on your show. So basically, as you rightly mentioned, market has been trying to remain resilient because we have seen time and again that both the parties, they want to end this war. So there may be some flare-ups and then settlement coming in. But more or less, the things are moving in the right direction in terms of settlement and maybe the reopening of Hormuz. I think, and one more thing which is supporting the market is the valuations, because for the last 2 years, market has been more or less flat. And currently, based on the consensus estimates, we are trading below long-term averages in terms of valuation. So I think that is the support that markets are having. But only trigger that markets are looking for is the basically earning revival, because earnings for the last, I think, 5, 6 quarters have been growing in the single digit. And based on the current estimates, I think market is hoping for some acceleration in the earnings from FY27 onwards. And the sooner this conflict ends, I think the market will get confidence that earning revival is on the cards, and then market can find their way upwards. But as of now, because things are moving too fast, and also the market will also try to look at the Q1 earnings, how they pan out. Are there any earning downgrades further? I think those things will determine. But on the fundamental basis, on the valuation front, I think we are okay. And only thing we need to watch out for the earning trajectory from here on.
What's the preference, Dikshit? Is it, hi, this is Harsha, by the way. Is it large cap versus mid small? What's the preference or the tilt?
Yeah, so basically, rather than going by the standard definitions of large or mid or small cap, we internally try to see what are the sectors which are adding incremental growth to the corporate earnings or maybe to the GDP. And as of now, what we believe is the sectors like financials, like you see the whatever 3 quarter updates have come in, I think the loan growth have been quite healthy in mid to high teens. So financials, I think, should do well. Second is domestic pharma, the kind of monthly numbers that we are seeing on the IPM. I think those are seeing some kind of acceleration. Most of the companies are going in low double digit to mid teens. I think domestic pharma is the sector to look out for. And then maybe the some of the new age companies who are taking market share away from the brick and mortar companies. I think those companies should do well. They continue to do well. I think in future also they can do well. And then one more thing, what we are noticing is export story, domestic manufacturing as well as export story. I think that is panning out quite well. In fact, the last month's trade data that we saw, I think the manufacturing exports have grown by double digit if we remove the oil part. So I think that is the theme, and within that, engineering goods, chemicals, pharmaceuticals. I think those are the few sectors I think which are seeing strong traction, and these are the sectors we are betting on, and whatever companies who are participating in this growth, I think we are investing into that.
Some of the sectors that you're liking. Dikshit, unfortunately, we have to slip into a time-bound commercial. Stay on with us. We'll continue this conversation. Back with closing trades, and of course, you're catching us live from the Suzlon studio here at ET now. Before the break, we were in conversation with Dikshit Mittal, the senior fund manager at LIC Mutual Fund. And let's keep that conversation going. Before the break, Dikshit, first of all, thank you so much for staying on. Dikshit, before the break, you told us about some sectors that you're liking, financials, pharma. What about the ones that you are not comfortable looking at right now, since this approach is largely top-down? Give us a sense of where you believe the earnings growth is either lagging or the valuations don't look very attractive right now.
As of now, we are avoiding global commodities because there's too much volatility globally, and it's very difficult call to take where this will end and where the prices of commodities will settle. As of now, except from global commodities and to some extent IT, where we don't have the visibility as of now when the growth will pick up. I think these are the two sectors we are underweight. And in terms of overweight, as I mentioned, consumer, healthcare, financials, and manufacturing export theme, I think we are betting where we have good growth visibility and where we believe that investors can make good compounding returns over the 3 to 5 year time period.
And trying to get a sense, Dikshit. So IT, currently you're sitting out of it just because of no growth, but valuations coming off sharply. Isn't there value emerging over there? I mean, at some point, growth is likely to kick through. Is that your thesis?
Yeah, right. You're right. Valuation wise, I think most of the large cap companies are trading below 15 times P multiple. So one can say that they are trading close to the bond valuations, and market is not ascribing any major terminal growth to these stocks. So no doubt these companies may fall into the value zone. But for us, I think we'll tend to buy these companies when we have slightly better visibility on the growth picking up. Because equity as an investment, I think investors look for growth, and where we have good visibility on the earnings growth with a large degree of confidence, then only we can invest there. So as of now, I agree that on a valuation front, these stocks are cheap. So that's why we are not avoiding completely. We are underweight on this sector. But to increase to weight to neutral or overweight, I think we'll look out for the more evidence before turning more constructive on the earnings growth revival for these companies.
So it's largely a wait and watch approach that you are adopting when it comes to IT. Dikshit, talk to us about your view on real estate. It's a sector that is just coming out of a slump. Post-COVID, it saw a spike, then saw a slump, and it's trying to come out of that now. We've seen some exaggerated moves on that index. How are you looking at that sector, and do you have any holding over there?
Yeah, we have some selective holdings in the real estate because anyways, in the high inflationary scenario which we are seeing globally, I think hard assets tend to do well. I think this sector falls into that category. And more importantly, we are looking out for some of the companies which have built large annuity income in their portfolio. So even if there is some downturn in the residential part of the portfolio, they have good cash flows, visibility of the cash flows from the annuity portfolio. So particularly, we are liking the companies who have some kind of rental assets, whether it's commercial or whether it's like hospitality and all, performing some part of their value. And then on the real estate, we are positive. What we believe is that the kind of you can say pre-sales these companies are reporting, the kind of launch pipeline most of these companies have, and the you can say the incremental demand coming from employees of GCCs and all. I think those should continue to benefit the sector. But as a you can say as a safety net, we need to have some kind of annuity cash flows within the companies to be more constructive, so that these companies can withstand the downturn slightly more better.
Hmm. How you playing consumption, Dikshit? If you can give us a sense.
Yeah. Yeah, consumption, we are positive. Even if you see, even Q4 also, we saw some evidence of volume growth picking up. Even in Q1, whatever the pre-quarter updates we have seen from the companies, I think most of the updates have been quite positive. And after this GST rationalization, I think there is some amount of buoyancy in terms of the demand growth. More importantly, now inflation is also picking up. So I think on the nominal basis, these on the top line front, I think growth will accelerate on the consumer sector. So overall, we are positive, but we tend to remain invested into the you can say within these sub segments which have low penetration in India, rather than betting on the consumer staples. Some of the categories which are having low penetration as compared to our global peers, where the runway of growth is higher, so that one can be slightly more you can say confident in paying higher P multiple, because most of these consumer companies are trading at high P multiples relative to general market as well as the global peers. So wherever which categories where we are seeing a large runway from growth, we are ready to pay premium also. So some of the categories like retail, footwear, or maybe some of the new age consumption companies, I think in these kind of pockets, I think we are invested into. Even packaged food, I think these some of the categories I think we are looking to invest.
Dikshit, you're very bullish when it comes to consumption. Good to hear that. Also give us a sense of in what, if you can quantify the kind of growth that you're expecting to see this earnings season or maybe a couple of quarters ahead. Why I'm asking is because, one side the geopolitical uncertainty is back in action. That escalation is something that we're seeing. But if you look past that noise, do you believe fundamentally or structurally India is well poised to deliver double-digit earnings growth?
Yeah, I think we seem to be poised for some kind of revival, because the largest segment of the market, which is the banking sector, I think is showing some kind of acceleration in the loan growth, as well as the NIMs are also seems to be bottoming out. So we are constructing at the start of this financial year. I think consensus, most of the brokers are expecting anywhere between 15 to 17% kind of earnings. But we need to see Q1, because Q1 can throw some kind of negative surprises also, because this was a peak of this crisis, and many of the companies, especially on the auto or maybe industrials, will see some kind of margin pressure because of this commodity inflation. So I don't rule out some of the cuts into the earning, but otherwise, I think as compared to the trajectory of last 2 years, where we have grown at 6-7%, I think there should be good amount of recovery. But only caveat is that this issue should not linger on much more. I think because Q1 earnings, I think market is now factored in. But if this issue lingers on and there is some impact on the Q2 earnings also, and then I think there may be some kind of downgrades in FY27. So internally, basically, we are trying to look out for the normalized level of earnings, because one cannot predict when these things will settle down. So in a normalized scenario, we try to figure out what is the earning potential of a particular company or as a market as a whole, and then only we can take a call with a 2 to 3 years perspective whether we can invest or not.
So this one is going to be a long game to play out and watch for. But on that note, Dikshit, thank you so much for your time, and thanks so much for sharing your views and how you're positioned right now. Thanks so much for sharing that with our viewers.
Thank you.
Thank you so much. Okay, viewers, and shifting focus, we've been speaking of some stocks that have been a buzz since the get-go on the back of news or specific action. But let's take it across to Rabinder, who's joining us with a list of yet another basket of stocks worth watching out for in trade today. Rabinder.
Well, as Fedwing Financial Services is in focus after reporting the strong Q1 FY26 earnings, and in Q1 FY27, companies NIS surged by approximately 39% on a yearly basis to rupees 372 crore, supporting the profitability, and gold loan AUM also rise by approximately 77% at rupees 11,191 crore, emerging as the biggest growth driver for the company. Grow is also in focus after reporting its Q1 FY26 earnings, where company's total income jumped by 63% on a yearly basis to rupees 1549 crore, while remain broadly with the stable and stable sequentially. And PAT margin expanded to 47.5% up, which was up 760 basis point on a yearly basis, which was supported by the operating leverage across cost buckets. Still, Strip Wheels is also in action after reporting its quarterly earnings, where in and Q1 of FY27, company's profit grew by approximately 47% on a yearly basis at rupees 69 crore, and EBITDA margin has expanded from 10.3% to 10.8%. Ether Energy is also in focus, where Hero Moto to invest around 1,000 crore in the company. And lastly, Pidilite Industry is also in focus on the back of positive brokerage note, where HSBC has come out with a note and they have initiated coverage with buy rating and target price rupees 1890, which is 19% upside from the current market price. So back of this, Pidilite Industry is also in focus, and the stock is up approximately 1.5 to 2%.
Thanks so much for taking us through that. So yes, lots of stock-specific action as well as some brokerage action that is turning out to be favorable for some names like Pidilite and Trade. But on that note, time to slip into a very short break. We'll keep the conversation going both on the technicals and fundamentals on the other side. Stay tuned.
Welcome back. You're watching Closing Trades and thanks for staying with us. We are coming to you live from the Suzlon studio with Deepan Mehta, Elixir Equities, and Nagraj Shetty as well of HDFC Securities. Deepan, I'll come to you in just a minute. Let's quickly take a chart check first. Nagraj, what levels are you looking out for? And it's a healthy move on the index, at least today. Despite all the negatives, we're doing fairly well on the index, right? Last couple of days.
Hi, good afternoon. Yes, market has been in a range-bound action at the lower levels, 24,000, below that 23,800 is a strong support for the market. On any upside, around 24,200 and 24,500 are likely to be our resistance. Market is likely to move in a choppy moment, range moment for the next 1 or 2 sessions before showing its further course of action.
What are the levels you're looking out for on the index, Nagraj?
Yeah, immediately I'm looking for 24,200, 300 levels resistance. Once it breaks out, then we could see Nifty heading towards 24,600.
What's the support, Nagraj, on the index?
23,800 is going to be a support.
Perfect. Okay. And what will drive, Nagraj, the moves? Banks, you believe? IT, you believe? What will be the drivers?
IT has bounced back very well from the lower levels. We can say that the information of a crucial bottom reversal for IT, more upside is likely for the IT after small consolidation. Bank was moving range-bound action after a decline. It has shown some choppy moment recently. I'm not expecting a bigger decline in the bank as well. At the lower levels, 50,000, 56,500, 50,000, 57,000 is going to be the support for the bank Nifty. And eventually, I'm expecting the bank Nifty to bounce back from the lower levels.
Okay, that's a take coming in on the index at that level. But Deepan, hi, good afternoon. Also give us your sense in terms of how you're reading the market. Resilience largely is something that we're seeing in the market given everything that's panning out geopolitically. And we've been in that range, but nonetheless, we're showing some good resilience when it comes to the market. How are you reading the market moves at present?
First of all, good afternoon and thank you for having me on your show. I think the Iran war is going the way the Ukraine war has gone. And while there were tremors when the Ukraine war started, but then after 4 or 5 years, it's become business as usual and like a new normal. And I think this particular war with Iran also is going the similar way, where despite blockades and despite renewed hostilities, the impact on the oil market has been limited. Of course, it has gone up from $75 to about $80 or so, but it is not threatening. And I think businesses, countries, policymakers, they are moving ahead and going ahead with whatever has to be done to ensure that supply chains remain strong, export markets are revived, and domestic economy is safeguarded. And I think look at the way the earnings season has shaped up so far and whatever peak quarter releases we got, I think the impact has been far less than what we expected. So I think that by and large, the market looks good. There are some challenges when it comes to large cap stocks, but I think that we have a very, very vibrant small mid cap universe. And I think that's where investor attention is focused on.
Okay. And Deepan, therefore, what should you start going long on, if you can give us a sense?
See, I think there are a lot of investment themes playing out which are showing decent growth, and investors are aware of these investment themes also. They are working on it also. Like, of course, the biggest investment theme going around in town these days is the defense investment theme, and that's just showing no signs of slowing down. We are seeing a whole host of public and private sector defense companies do exceedingly well, given good returns, and now order books also are steadily flowing to these companies, providing earnings visibility. So that's one very strong investment. And then this entire data center and rising electricity energy consumption, that also is a very strong mega trend, and that's having its effect and benefiting many sectors, I would say, right from transformer manufacturers, transmission companies, and even I would say that it is benefiting a lot of the companies engaged in providing data centers as well. So like that, I think if you go step by step, I think there are very strong investment themes playing out, and investors are aware about it. We've discussed it on your channel as well. The fact of the matter remains that there are enough growth stocks. It's just that valuations sometimes tend to go out of hand. And when you find an attractive stock at reasonable valuation, and mind you, we are still looking for it. I know your next question. But when you find attractive stocks at reasonable valuations, that's a good entry point. And lastly, I think we are entering into a earnings season. So I'd just like to say that there's always a lot of stock specific volatility. Stocks go up 5, 10, 15, 20% on good results, go down on bad results. So better to understand the company's results, management commentary, and then make a fresh investment.
Deepan, I wish we could predict Donald Trump's moves the way you predicted our exact next question. So while you find out where the valuation is looking attractive right now and what's looking good from an earnings point of view, let's refocus. Let's talk about the India-UK FTA that has come into effect today, unlocking duty-free access for Indian exports. The new trade pack offers significant export chances for manufacturers, lowering tariffs and benefiting sectors like textiles, leather and processed foods. My colleague Ashesha is joining us with the lowdown.
Well, yes, so the India-UK Comprehensive Trade Agreement, which was signed in 2025, somewhere in June or July last year, is all set to come into effect today. That is the 15th of July, 2026. And a whole host of sectors are likely to benefit as a result of that. The trade agreement says that the bilateral trade between UK and India is likely to jump 2 times by 2030. It also means that tariffs on 99% export goods to UK will be cut. India has opened 89.5% tariff lines for UK into the Indian market, and 24.5% of exports get immediate duty-free access. Those are largely the 4 main benefits across sectors for India as well as the UK market. Let's put the spotlight on a couple of products which get duty-free access in the UK market. Processed food, vegetable oil. We also have transportation and other auto products which are exported, leather and footwear, electrical machinery. We have textiles. Textile is one big factor and one big sector that will tend to benefit as a result of this. Wood, paper and a couple of other products which will get duty-free access to the UK market. Other than that, we also have base metals, machinery, minerals, and a couple of other products which include dairy. Dairy, of course, is a sensitive sector for a market like India, and hence India has safeguarded sensitive sectors like dairy, cereal, we have millets. We also have pulses and a couple of other products that are flashing for you on your screen. So these are some sectors and products which India has safeguarded as a part of India-UK bilateral trade agreement. But 2 sectors which are likely to be in focus on the back of this, one from the alcohol beverage industry, and that is because import duty on whiskey from 150% currently is likely to come down to 75% immediately, and over a period of next 10 years, this duty will come down to 40%. Meanwhile, UK-built vehicles which are imported into India, from the current 110% duty, the duty will gradually come down to 10% over the next 10-year period. So these are 2 sectors which are likely to be in focus on the back of this reduction in customs duty as a result of India-UK bilateral trade agreement. Meanwhile, British goods will also get free access into the Indian market, and hence competition for these sectors back home in India is likely to rise. One of them, of course, is chocolate, soft drinks, non-alcoholic beer. We also have gingerbread, sweet biscuits, auto parts, machinery, textile, and mechanical tech devices. These are some sectors where competition in the Indian market is likely to increase because British players will now be able to export into India without any kind of duties. Let's also talk about India and UK's trade then. In FY22, India's exports to the UK stood at about $10.5 billion, while imports stood at about $7 billion US. Fast forward to FY26, we have exports which have risen to a solid $13.5 billion US, and imports meanwhile stood at about $12 billion US. So that's how the trend has been for import and export into the UK market from the Indian market. So that's how the statistics plays up. Meanwhile, we also have Prime Minister Narendra Modi, who has said that it creates unprecedented opportunities for our textiles, leather, gems and jewelry, engineering goods, marine products, chemicals, processed foods, MSMEs, farmers and manufacturers. It also opens new frontiers for our IT, professional, financial, education and business services sectors while expanding mobility for Indian talent. So that's the view coming in from Prime Minister Narendra Modi. But yes, several sectors, especially some like textile, are in focus on the back of this India-UK FTA coming into effect from today.
We've got Deepan Mehta and Nagraj Shetty, who've been with us for some time now. Nagraj, coming to you, share with us your stock-specific recommendations this afternoon. What's looking good on the charts?
Hi, I have two stocks on the long side.
Okay.
First one is LIC. LICI has been in a consolidation phase over the last few weeks and made an attempt of breakout somewhere around 448, 450 levels. The overall chart pattern is looking positive. Daily RSI placed above 60. I'm expecting more upside in the near term. Currently trading around 440. One can look to buy at this current market. Immediate target would be around 465. One can place a stop loss at 425. Second one is RACL Gear Tech. The stock has been moving in a larger consolidation phase, kind of a triangle pattern, and currently in an attempt of breakout of the pattern somewhere around 1365, 1370 level. The overall chart pattern is indicating a possibility of sharp up move in the near term. One can look to buy at this point of time. 1425 is going to be the immediate target, and one can place a stop loss at 1330.
How, Deepan, you're looking at the life insurers because ICICI Pru Life's numbers came. I'm not sure if you had a chance to look at it. 26.7% on that VNB margin number, 15% growth on APE. This was not penciled in, frankly, from an expectation standpoint. It's a resounding beat, and this is one of the more reasonable, or in terms of valuations, one of the more reasonable names. I don't know what to make of the numbers and life insurance space in general because stocks haven't moved much.
See, first of all, these life insurance companies are very difficult to analyze and track. And from time to time, good results come also, and stock prices move up as we have seen just now. But it's a highly competitive and highly regulated industry also. And look, there's only so much of money you can allocate to financialization of savings. And I think rather than the insurance companies or the asset management companies, we are more positive on the say stockbroking companies or the exchanges, and the best within the entire category, of course, are the wealth managers. So I think that insurance companies are good, steady performers, and in times when the market is in turmoil, I think they are good, safe players as well. But from a growth perspective, I think there are better options within the larger, broader financialization of savings investment theme.
Deepan, how are you looking at the tilt between large private sector banks and PSU banks? We've got a bunch of large private sector banks earnings over the weekend. How are you expecting the numbers to look like? And also on the PSU front, that index has been doing well off late for the past couple of trading sessions. Any favorites from that basket?
Oh, I thought Bank of Maharashtra and Indian Bank came with very good set of numbers, and their performance, qualitative, quantitative, is giving all the private sector banks also a run for their money. And I think that next quarter, couple of quarters, banking sector also should do well because of increased inflow of foreign currency, NRI deposits, ECBs as well. So they will have more money to lend, and the kind of challenges coming in terms of raising deposits, that may get addressed over there. But look, medium to long term, banks are becoming a red ocean, and I wouldn't want to get too overweight in the banking sector. In any case, I think banks, financial services are now 37% of the Nifty index, and that's pretty high. So I don't think that such high weightages are sustainable as well. So while I think there's a good trading rally in the next few weeks, months, we can expect on the banking side, but I would be a bit cautious. And the better way, according to me, to play the lenders is to the multi-product NBFCs. Now, see what numbers came through from L&T Finance. I think very good numbers coming through from there. Of course, there are some red flags because they have a large rural book, but if they're able to manage it better, the management is pretty confident of a 20% plus type of a growth rate. And I would say that their net interest margins, their credit costs are in line with the best in the industry now.
Okay, let me go across to Rabinder. Kusumgar has made a stellar debut on the street with MK initiating coverage with a buy, target price of 800 rupees a piece. And the brokerage remains bullish on the company's aerospace and defense segment and improving profitability as well. Rabinder here with more details.
Whereas Kusumgar Limited made a strong market debut with the listing at a around 36% premium as compared to issue price, and following the listing, MK has initiated coverage on the stock with a buy rating and target price of ₹800, which imply around 31% of the upside from the current market price. Brokerage believes that the company's biggest strength is company's aerospace and defense fabric business, which contribute to nearly 45 to 50% of revenue and delivers the highest margin. And despite this, Kusumgar has only 3 to 4% share of the domestic market, leaving significant rooms for the market share gains. And MK expect that the strong growth will be supported by rising global defense spending, India's free trade agreements, and the company's focus on high entry barriers products. And Kusumgar is also one of the few military parachute fabric manufacturers globally outside the China and US, giving it strong competitive advantage. And another key positive is that its diversified business model. While defense revenue decline in FY26, strong growth in the industrial and outdoor segment helped cushion the overall impact, and this also helped the company to improve its EBITDA margin to the highest among its listed peers. And looking ahead, MK expect revenue, EBITDA, PAT, CAGR of 34%, 35%, and 46% respectively over FY26 to 29 as defense ordering recovers and all four segments scale up. And they also believe that the company will move from a net debt position to a net cash position by FY29, further strengthening its balance sheet.
Okay, Rabinder, thanks for taking us through that. So that's MK's view on Kusumgar, initiated coverage on the stock that has just made its D Street debut today. And it's been a stellar move post that debut, 42% uptick coming in on Kusumgar and very close to that 600 rupee per share mark. Deepan, also was wondering if you've had a chance to look at the numbers coming out of Grow. Solid set of numbers coming in. The profit has almost doubled. The EBITDA has doubled on a year-on-year basis. Revenue growth is also looking rather robust at 66% year-on-year. The con call is underway of Grow. We've got the flashes on the bottom of the screen, and one statement that really stands out is that they've received license for trading US stocks on the platform, and currently that is in the testing phase. Now, this could be an up and coming segment for a lot of companies like Grow, Angel One. Deepan, how are you looking at some of these companies? You did say that some capital market related companies look good. Your view here? Okay, we've snapped that connection with Deepan. We'll take that conversation ahead on the other side of this very short break where we try and fix that line once again. But stay tuned and we'll be right back. Back with closing trades, and before the break, we were before that line with Deepan got a little snappy. We were trying to get his view on Grow. Deepan, hi. I hope I'm audible to you now. Can you give us your sense on how you've looked at Grow's numbers? The revenue is up 66%. You've seen a doubler in terms of the PAT, EBITDA, all of that looking good for Grow. And in fact, in their con call, they've also said that they've received the permission to list some US stocks on the platform and enable trading for them, and that is in the testing phase right now. How are you looking at some of these names like a Grow and Angel One, a Nuvama, for instance? Anything to do with the capital markets theme?
That's what I said earlier in the interview that,
Yeah.
when we spoke about SBI funds and the listing, that the best way to play, and insurance companies rather, the best way to play this financialization of savings is through companies like Grow, Motilal Oswal, asset managers like Nuvama, 361, maybe even exchange companies. And I think NSE also, when it comes to that IPO, will be very, very successful. So I think that the growth rates are more over there than the AMCs and the insurance companies where there is intense competition. And specifically, growth numbers, I think, are phenomenal. And in times like this, when there was so much of uncertainty, I think to report these kind of numbers is quite amazing. And maybe they are getting something right over here, because I'm sure their market share has gone up significantly in this quarter. And now clearly they're benefiting massively from the operating leverage which they have got, because they've constructed the platform. Fixed costs are more or less growing in line with inflation, slightly higher. But as and when more revenue comes through because of higher asset prices, more subscriptions, more customers, a lot of it is flowing to the bottom line. So I think great numbers from management. And even at these valuations, I think this company can deliver decent returns.
Okay, so that's the take coming in on some of those companies. But let's cut to the cabinet briefing. We've got Union Minister Ashwini Vaishnav, who's currently addressing that presser. Big schemes coming in. The biggest one, the mobile phone manufacturing scheme, has an outlay of 62,500 crore rupees, is what we're gathering early on. But let's cut across and get more details on that.
देश विदेश से लोग आ रहे हैं, तो काशी में इंफ्रास्ट्रक्चर का डेवलपमेंट का काम बहुत हुआ है. एक नेक्स्ट लेवल का इंफ्रास्ट्रक्चर डेवलपमेंट जो करना है, वो आज 2 अप्रूवल हुए बड़े. पहला है वरुणा नदी के किनारे किनारे कंप्लीट 6 लेन और 4 लेन एलिवेटेड कॉरिडोर. ये वरुणा एक्सप्रेसवे का कंप्लीट रूट मैप. ये हम देखेंगे गंगा जी इधर. ये गंगा जी, वरुणा नदी कंप्लीट जैसे उनका पाथ है वरुणा नदी का, उसी के साथ साथ पूरा एक एलिवेटेड कॉरिडोर. क्योंकि शहर के अंदर अब रोड्स को एक्सपैंड करना मुश्किल हो जाता है. शहर भी बहुत हजारों वर्षों पुराना शहर है. तो एक नया कॉन्सेप्ट निकाला गया है जिसमें वरुणा नदी के साथ साथ कंप्लीट एक एलिवेटेड कॉरिडोर एयरपोर्ट को कवर करेगा. एयरपोर्ट को कवर करते करते जाके काशी स्टेशन है यहाँ पर रेलवे का, और एक नया नमो ब्रिज बन रहा है. उस नमो, ये यहाँ पे 6 लेन हाईवे और 4 लेन रेलवे का, ये जो ग्रीन कलर का दिख रहा है ना आपको, ये नमो ब्रिज बन रहा है. इस ब्रिज के साथ लगा हुआ ये पिंक कलर का, पर्पल कलर का कंप्लीट ये एलिवेटेड कॉरिडोर बनेगा. (43 किलोमीटर इसकी लेंथ है. 10,998 करोड़ रुपीस की इसकी इन्वेस्टमेंट आएगा, यानी 11,000 करोड़ का. हैम मोड में डेवलप होगा और करीब करीब 4 साल में कंप्लीट होगा. बहुत इंपॉर्टेंट प्रोजेक्ट है, और ये प्रोजेक्ट एक तरीके से देश के लिए जो बहुत पुराने शहर हैं उन शहरों के लिए मॉडल बनेगा. शहर कंप्लीटली, शहर का जो कोर है, सिटी का जो कोर है, वो इससे डिकंजेस्ट हो जाएगा. वाराणसी एयरपोर्ट, वाराणसी रेलवे स्टेशन, वाराणसी कैंट रेलवे स्टेशन, चौका घाट, संपूर्णानंद संस्कृत विश्वविद्यालय, काशी रेलवे स्टेशन और नमो घाट, और नमो घाट के आगे फिर नमो ब्रिज, ये सब के सब इससे कनेक्ट हो जाएंगे. टूरिज्म में बहुत सिग्निफिकेंट इंप्रूवमेंट आएगा. लोगों के जीवन में बड़ा परिवर्तन आएगा. काशी के निवासियों में एक नई खुशी की लहर, एक नए तरीके से पूरे शहर का ट्रैफिक का फ्लो इससे परिवर्तित होगा, चेंज होगा. दूसरा है गंगा जी के साथ साथ.
Okay, that's the word coming in from Union Cabinet Minister Ashwini Vaishnav, just reading out what these approvals have been from the cabinet meeting. The River Varuna elevated corridor that the minister was speaking about, 11,000 crores roughly in terms of the outlay over there. The big one that stands out is Semicon 2.0, 1.27 lakh crore is the kind of outlay that we're seeing on that front, followed by 62,500 crore rupees laid out for mobile phone manufacturing scheme. That's the MPMS. The National Investment Policy for urea policy decision is pending over there for urea 2026. So you've got a bunch of companies on the fertilizer front, RCF, FACT, GSFC, all of those could stand to benefit National Fertilizer. Let's pull up all of those stocks, see if there is any change over there. You're already seeing some excitement coming in on Keynes and Dixon. Dixon on account of this mobile phone manufacturing scheme, and Keynes doing well on account of the Semicon 2.0 scheme that has been announced with an outlay of 1.27 lakh crore rupees. Other than that, yes, there are some infra projects that have been announced, nominal allocation over there, but yes, these two are the biggest ones. The Semicon 2.0 and the mobile phone manufacturing scheme, that's the MPMS that we've seen. You've seen the excitement in Dixon Tech. Also want to try seeing the stock move for something like a CG Power for Semicon. They have also entered into OSAT agreements for their chip manufacturing. CG Power also seeing a little bit of an uptick coming in right now, 1.8% higher for that one. And then, of course, you've got these urea fertilizer companies at play, Chambal, RCF, FACT, National Fert, GSFC. All of those stocks could also be seeing a little bit of an excitement. We've seen a little bit of an uptick coming in all of those names. And in fact, Chambal Fertilizers has come up from the red, so looking good on that front. The other fertilizer names yet to catch up in terms of that action. But yes, most of them are on the infra front, and that's the outcome that we're seeing from the cabinet meeting as of now. Deepan, give us your sense on this entire Semicon 2.0 outlay that we're seeing. It's a big one, 1.27 lakh crores of outlay here. Talk to us about some of the biggest beneficiaries and the kind of push that the government is creating towards the semiconductor space. Where do you think some of the listed players over here are headed?
Well, I think the government has finally woken up to the fact that we need to get self-sufficiency for critical electronic components at the base level. So the investment in semiconductor is completely justified. And of course, the two companies which are implementing these projects rather, one is CG Power and other is Keynes Tech. I think certainly they will get an impetus and a lot of benefit. And more importantly, I think that if they get this particular business right, then it could be a great growth driver, because there's a learning curve over here. And if they're able to stabilize the technology and execute it well, then I think eventually a lot of government support in terms of curbing imports and promoting exports, and a lot of other benefits also will accrue the industry and to these two companies. So yes, I think that we are watching Keynes Tech very closely. It's come out significantly from its all-time high, and there have been reasons for it: accounting related controversies, volatility in the earnings also. But I think if this semiconductor project does well, the rest of the business, of course, is growing pretty well. So from that point of view, it is one company which is worth watching.
We'll be watching out for that. We've also got numbers coming in from HDFC AMC. The revenue has come exactly in line with what the street was estimating. 1,098 crore rupees is where that is at. The profit estimate was 740 crore rupees. It's coming at 838. So in fact, it's a beat on that front when it comes to HDFC AMC. You can see that very sharp spike coming in on the stock right now, about a 3% uptick on that one. Good show when it comes to the EBITDA number, but we've seen a little moderation when it comes to the EBITDA margin. We'll be bringing you more numbers on HDFC AMC, but the initial reaction on that stock has got the street excited about these numbers. Nagraj, a quick chart check on HDFC AMC at the level at which the stock is right now. How are you looking at it, and how is it placed on the charts?
Yes, Nehi, HDFC, I won't be able to comment on this due to compliance.
That's a miss from my end. Apologies for that. But give us your sense on some of the other stocks that have got the street excited in terms of the cabinet announcements that we were just listening to. On the semiconductor front, on the mobile manufacturing front, anything looking good from Keynes, Dixon, CG Power, anything standing out, or Sirma too?
Yeah, CG Power is the one has been in a constant uprun over the last many months. Higher tops and bottoms on the chart is indicating a strength of an uptrend. Recent downward correction has shifted into a sideways range, and the stock price is now an attempt of breaking above the range. Looking positive, and the next overhead resistance to be watched for the CG Power is somewhere around 980 to 990.
HDFC AMC, there's been that other income which is also impacting PAT. per se. There's a 263 crore other income versus 233 crore same time last year. So that's what's caused a bit of a spike on the PAT. But otherwise, it's a resounding beat. Deepan, your reading of the numbers, if at all you've had a chance to just quickly glance through.
See, I think that you will have decent, steady performance from all the asset management companies, including the new listing, SBI Funds Management. But then I think the real alpha comes from companies like Grow, to an extent, exchanges, where I think the growth rates will be significantly higher. So while these companies are also good, steady performers, our preference is for other players in the similar investment theme, the capital market industry per se. That's where we stand. And end of the day, it's a very competitive business, whether it's AMCs or insurance companies, highly regulated also. There's a risk of SEBI stepping in to curb the total expense ratio. So these things, considering the risk return and the valuation, like HDFC AMC trades at what I think 41, 42 times or so. Already it is trading at a price earning growth of around 2 or more. So how much more can you expect in terms of returns at such high valuations is what kind of makes us like leads us to a kind of a neutral view on the stock.
Neutral reading coming in on HDFC AMC. On that note, Nagraj, thank you so much for your time and for sharing your views with us. But we also have Sahaj Agarwal of Kotak Securities who's joining us on the show right now. Sahaj, hi, good to be speaking with you. Before we get your view on some stocks and some sectors that are in the spotlight today, share with our viewers some stocks that have made it to your radar. What would your picks for this afternoon be?
Yeah, hi Snehi, and
Hi.
good afternoon to the viewers. So the two stocks that I like is one is SBI Life. I think looking at a space, which is lesser impacted by the geopolitical volatility, plus the technical structure of the stock looks extremely interesting. It's given a breakout of a weekly selling trend line on a larger time frame. So that makes the stock pretty interesting. And even today, as a matter of fact, the stock has been outperforming. So I believe momentum out here is expected to continue. I would suggest a buy on the current stock with a stop loss of around 1800, and on the higher side, one can expect a target of around 1950 in the short term. Fundamentally, also, we have an extremely positive outlook on the stock. So that's one opportunity that I like on the momentum space. The other one that I would like to share is Grasim Industries. Now, that stock has actually given a monthly breakout, say 2 months back. And since then, it's just been consolidating. I think it's just after this correction, it's come around its momentum support level of around 3000, currently trading around 3085 or something. So that also makes it a very interesting risk reward proposition with the stock being in an uptrend on monthly charts. So that's another opportunity for a target on the higher side placed at 3300. So these are the two stocks that look interesting on my radar in terms of the overall setup of the market.
Okay, understood. So SBI Life and Grasim, two stocks that have made it to Sahaj's radar. But shifting focus, the Adani Group has entered India's top 10 most valuable brands for the first time. According to the Brand Finance India 100 report 2026, the conglomerate climbed to number 8 with its brand value rising 31.3% to $8.48 billion, which is the fastest growth among the country's top 20 brands. The report also names Adani Power as India's most valuable energy brand, while Adani Green Energy and Adani Energy Solutions also feature among the top 5. Commenting on the rankings, Alex Haig, the managing director of Asia Pacific Brand Finance, said that this entry reflects its strength that has become deeply embedded in India's growth story. But once again, shifting focus back to our market conversation, Deepan, the consumption space has been in focus for some time now. Of course, all eyes have been on Patanjali today, which has been the biggest casualty on the street. We spoke with the management, and they're confident of attaining all the growth guidances that they had chalked out for their business for FY27. They say there is no regulatory concern also right now that's at play. But yes, we're seeing a massive cut coming in on that stock in today's trade. How are you looking at a player like Patanjali, and how are you looking at the overall consumption pack?
See, I don't think we track Patanjali, so I want to comment on that. But overall, our view on traditional FMCG companies is negative, and we are seeing that the kind of categories they're operating in are very, very mature, and growth rates have come down to kind of low single digit in terms of volume, and that doesn't really interest us. Of course, they may become value buys also, But end of the day, I think long-term returns will be very diminished from the FMCG industry. There are a few exceptions. These are new FMCG companies, companies like Honasa, Zydus Wellness, Nykaa, Varun Beverages, where I feel the growth rates will still remain strong because they are in under-penetrated categories. And then there's, of course, the entire alcobev industry, especially Indian alcobev companies, Radico Khaitan, Tilak Nagar Industries, Associated Alcohol, Allied Blenders. I think all of them have done exceedingly well, good track record. And that's also one category, although we call them alcobev, but end of the day, they are like an FMCG player only. So that's where we need to focus on. And I would avoid the likes of HUL, Colgate, Nestle, Godrej Consumer, Dabur India, where I think growth rates have structurally become extremely low.
On traditional FMCG companies, you spoke about some alcobev names, and Sahaj, given that the UK-India CETA has kicked into action today, alcobev stocks are some of the biggest beneficiaries of this trade pack. Give us a reading on how you're looking at something like an Allied Blenders, Radico, UBL, USL, anything looking attractive on the charts?
So as a matter of fact, Radico Khaitan has been outperforming significantly. I mean that's one stock in that pack that's done extremely well. I think from the trading perspective, it does look interesting for sure. I would not put it in the value category for sure, considering the returns that it's given in the last 6 odd months. So from an investor perspective, I would say one should probably keep a buy on dips stance. But from a trading perspective, yes, you can go about. With a short-term trading setup, wherein currently the short-term support for the stock is seen at 39.80, currently trading at 4080, probably on the higher side of 4200. For this momentum setup looks quite possible. But again, this is a pure trading setup. It's quite far away from its core value proposition.
Okay, I wonder how you look at Eternal, Sahaj.
Yes, let me just have a look at that one. Yes, Eternal, in fact, so I'd say currently, I mean, looking at the monthly charts, the stock has given an up move for sure, but I would say there's a very stiff resistance placed around 305. So for a positional play to happen from here on, for the stock to actually gain further momentum, I would really want the stock to sustain above that 305 level, and then maybe a fresher opportunity could come in. See, we have to look at it from the market perspective as well. The market's underperformed, and select movements are happening. But if the movement is stretched enough, and if you hit a resistance, then the proposition really doesn't remain as attractive. And hence, it's important for the stock to cross 305, 310, and then maybe a very good opportunity could kick in. But as of now, I think it's more of wait and watch for the stock to cross this resistance level.
Deepan, I wonder how you look at something like a Tata Motors PV. We've seen quite a fall on that stock. 330s is where I last saw it trading. What's the sense on this one?
See, I think that we have a slightly, I would say, different view on Tata Motors PV. And the reason for that is that at some point of time, I think JLR will again start to perform really well for the company. And that's a big one. And they're working very hard in getting the break-even point lower. And if they're able to achieve that, able to execute that, then JLR is among the 3 or 4 really luxury car manufacturers with a very exciting kind of model profile. And more importantly, I think they are well covered when it comes to electrification as well. So I think every model of theirs has got diesel, petrol, hybrid, and EV. So that puts them in a very, I would say, strong position. And it's just a matter of time whether when it starts to perform again for this company. And also the domestic PV business has suddenly started doing very well. We are seeing that after many quarters, they are gaining their market share again back. And again, Tata Motors, the domestic business has got a very sound EV strategy, and the new models have also done very well. So in terms of valuation and more so in terms of the potential to earn profits, we think that Tata Motors PV could be a dark horse.
Very interesting. Okay. On charts, Sahaj, do you have a view on Tata Motors PV?
So Tata Motors PV has been trading in a very broad range and witnessed massive volatility. That's the nature of the stock usually. But at this point of time, purely from a trading perspective, I'm seeing some support placed around the 325 mark. It's made a double bottom over there since the past 5 days. Also, it's not been able to break that level and has just bounced back from there. So I think from the trading perspective, put up a bit of a safety margin, 320 as a support level. And on the higher side, the previous resistance that it was facing is around 360. So these are the levels that I would watch out for Tata Motors PV purely from the trading perspective.
Okay, interesting. You're coming in on Tata Motors PV, both on the fundamentals and technicals, but shifting focus. The market has largely rewarded companies raising capital via QIPs. While most stocks have gone on to deliver healthy gains, only a handful have emerged as outliers. Avi is joining us with very interesting details on how companies have performed once they've raised capital via QIPs. Avi.
So a lot of companies have been raising capital via QIP in this past 6 months that we have seen for the year 2026. And what we saw was a very strong pattern that we could figure out. And what sowed this thought of we should do this research, it was a specific exclusive research done at ET Now. So when Blue Jet Healthcare came out with a QIP, we saw the stock rallying very strongly, and so did was the case with Idea Forge. We saw some very sharp buying in the stock after they announced the QIP. So we thought we should break it down for our investors as to the stock that has performed post QIP for the year 2026. Starting off from Biocon, the QIP was announced on Jan 12, and since then we have seen an 11% return, followed by E2E Networks that has been playing on the AI theme. We can see that on Feb 25 the QIP was announced, and since then a 55% return has been given to the shareholders of the company, followed by AGI Infra on 2nd of March. After that, the company has rallied by around 13%, and Poonawalla FinCorp, which is up by 18.5% from April 9th, the date on which the QIP was announced for the company. Moving on, we can see that Adani Entertainment also announced the QIP on the 30th of April, and since then the stock has rallied by 32%, JSW Energy by a mere 2%, but KRN Heat Exchangers, which has done phenomenally well over the last few months, was up by 12% since May 26 when the QIP was announced. Moving on, we can see that there was only one outlier in our research that gave a negative return since the QIP, and that was Sterlite Technologies, that is down by around 17% post 18 June when the QIP was announced. Apart from that, all of the stocks are in the positive since the QIP has been announced. As we can see, Acme Solar is up by 23%, and their insolvency case was resolved, and since then the stock has been showing some very strong rally and buying. Up next is Motisans Jewelers, is up by 18% since June 9, and JSW Infra from June 22nd June, it is up by 8%. So all in all, we can see that for the year 2026, companies coming out with QIP are showing some very strong investor interest and rallying up post their QIP fundraise. Strong names participating in the QIP is also a very big positive for the company, as we saw ICICI AMC participating very heavily in the Blue Jet Healthcare QIP. So if I were to summarize it, I think it is a very strong signal for investors to invest in stocks that are coming out with a QIP and the names participating in the QIP as well.
Thank you so much for that, Avi. Let me go across. We've got Mitali joining us for HDFC Life. What to expect from the numbers?
Right, talking about HDFC Life, so for Q1 FY27, the streets are penciling in a moderate growth in its new business, while the concerns of margin pressure are also being penciled in. The APE, which is a key measure of the new business sales of the life insurer, it is expected to grow nearly 8% on a yearly basis. However, on a sequential basis, the APE could see a decline of nearly 33%. This will be due to the seasonally strong March quarter. So the growth momentum, it remained weak during the quarter, followed by a slowdown seen in the month of April as well as May, while a flattish growth was seen for the month of June. The value of new business, which is a key measure for the profitability of its new policies sold, it is expected to grow nearly 5%. Now talking about the VNB margins, so it is projected at 24.3%, down nearly 80 basis points on a yearly basis. The margin pressure, it is expected to come due to the impact of the GST input tax credit losses, partly cushioned by a favorable product mix. The key focus for investors will be the management's commentary on the APE growth, the trajectory of the VNB margins, also the commentary on product mix and restructuring or recapping of any commissioning payouts. So the key takeaway as of now for HDFC Life, moderate growth for Q1 FY27 with positive growth seen in for new business sales as well as profitability, but margin pressure, that is a key concern that the streets are penciling in.
For those numbers later today, and HDFC Life is going to be in focus on the back of that. So here's a chart check on HDFC Life. 568 is where the stock is right now. What could the upside be from here?
So the HDFC Life as a stock is continuously on technical parameters been making lower tops and lower bottoms. But at this point of time, I think there's some resilience on the downside with the support that I'm looking at around 545 odd levels. I would say there's a good chance that the stock might just take a support of this level and maybe try for a bounce back towards 605. So a good possibility in terms of the technical setup that the stock can bounce back. So that's the view on HDFC Life at this point of time.
Okay, interesting. Some movers. There's Ather Energy, where you've seen some very decent moves. 7% higher on Ather actually. Let's pull that one up, Saj. What's the view there? 8% now.
Yes. So again, it's consistently outperformed, and I think as a trader, also putting a risk, a defined risk on such stocks becomes extremely difficult as such. But still, I would just stick my neck out and say it's a high risk opportunity at this point of time as well. Currently 1300, and because the stock has moved up around 8% today, the support level could be a little distant. But the uptrend is intact as long as 1160 is not broken. I know it's a little far, but that's the most objective level that we can look at. I would still advise a buying on dips being possible, but the stock is surely in an uptrend. And any possible correction should be used as an opportunity with 1160 as a stop loss.
Is there a view that you have on Patanjali, Sahaj? Because this kind of knock on the stock, what's the view there?
So ideally, the entire sector has been consolidating. I think you were having conversation with the earlier guest as well. The entire sector has actually been consolidating. And if you talk about Patanjali, since the beginning of this calendar year, it's just been under pressure. So if I were to put technical levels also, there's nothing that tells me that, on trading basis, there could be a bounce back. There could be some perceived value in the stock. One can take a contra call for the long term and possibly consider investing into the same. But at this point of time, in my understanding, I would give it some more time to consolidate, maybe find its base, give me some reversal signal, and then take a bet. So from my perspective, it would be an avoid. But from a long-term investment perspective, if you have this value onto the same, then maybe one can look at it. But nothing strong as such at this point of time.
Understood. That's the take on Patanjali. Sahaj, a couple of minutes left till we shut shop for the day. Where do you reckon the markets will be tomorrow and for the rest of the week? We've barely held on to the 24,000 mark and we've been in a very tight band. What could the levels tomorrow look like?
So to be honest, we've had a consolidative view, and today being the first day of this weekly expiry setup, Nifty just tested the yesterday's low and has bounced back. My understanding is still we don't cross 24,250 on the higher side. Things look a little consolidative in nature as such. So for the momentum setup to mature, the first level that I would want the market to cross is 24,250. Then maybe one can target 24,500, 24,700. Otherwise, consolidation and 24,000 has acted as a very strong support in the previous week, and today also in data parameters, you're seeing massive build up over there. So I think we're just hovering around the support level, expected to consolidate only, not really expecting a negative surprise as well. So a little dull is what my anticipation is.